Hello, ladies and gentlemen. Welcome to today's webinar, which is brought to you by Shared Services Link in association with MG. Pleased to be 7 urgent reasons to act now before it's too late. Founder and CEO at Shared Services Link, and I'm delighted to be introducing panelists today. Dennis Scarasati, great to have you with us.
Hello everyone, I'm Dennis Scarasati. I've been KPMG for 11 years now, implementing electronic invoices. Hope I can bring some insights for you today. And we also have Patricia Ray.
And also Patricia Ray to Jordan. Hi, Patricia.
Hello, Susie. Hi, Dennis. I'm Patricia Jordan, part of Vertex team, the EMEA E-Invoicing lead. Nice to be here.
Great. So great to have Dennis and Patricia with us today. And remember that line and your knowledge and your experience and your questions is fundamental to what you get from this session today. So use this hour as a 60-minute session to make sure that when you leave on the hour that you have the information that you need to take the steps forward. We will be sharing this recording after the webinar, and you are very welcome to share the recording and listen again, of course. So let's just take a moment and talk about why we're all here today. Just to take a step back, this webinar is based on a very exciting ebook that is published today, and it came out into the market today. And it's an ebook that you'll definitely want to have a copy of. So Vertex, KPMG, and Shared Services Link came together a few months ago to talk about how is North America, and when we talk about North America, we're talking about the United States and Canada, how is North America responding to the surge of global mandates that everybody is experiencing at the moment. Everybody in the rest of the world is experiencing at the moment, and some organizations in the US, of course, are experiencing as well. How are companies in North America responding? How should they be responding? And what are the actions to take moving forward? And critically, why are Canada and the United States not introducing national mandates already? So this is a webinar that's going to be exploring all of those questions. And I do urge you to also download the ebook that is published today and is available on sharedserviceslink.com. You will be invited to respond to a poll that will be asking you if you would like to have a copy later on. And I urge you to say that you would like to read a copy of it. It's a great ebook, and I highly recommend you taking a look at it. So this webinar is based on that ebook, and we're going to be looking at all these main issues. Now, before we go into the actual material itself, I'd like to just ask a couple of poll questions. So coming up on your screen shortly, let's kick off with 2 key poll questions. Coming up on your screen now, where is your organization on the e-invoicing journey? Have you fully implemented structured e-invoicing? Maybe you have partially automated your invoicing process. Maybe you're exploring options, but you haven't yet started. Maybe you have no plans to automate right now. Or maybe you operate in countries with e-invoicing mandates and you are required to comply. So where is your organization on that e-invoicing journey? If you could let me know, and I'll be closing the poll in 3, 2, 1, and we'll go ahead and have a look at those results coming up next. Let's see. So we have about 5% of you have fully implemented structured electronic invoicing. So it's a small amount of people on the line today. Some of you have partially automated your e-invoicing processes, so it's about 30, just shy of 30%. 40% of you are exploring options, but you haven't started. And 15%, or just over, have no plans to automate invoicing as yet. I think this webinar might potentially help you change your mind on that. And just over 10% of you say that you operate in countries with e-invoicing mandates and are actually required to comply. So a mixture of responses there. let's move on to our second poll question coming up on your screen now. What is the biggest driver for your organization to consider e-invoicing, would you say? Is the biggest driver your regulatory compliance? So maybe you're a multinational company headquartered out of North America, and you can see that mandates are affecting other countries and you need to come on board. Is it cost savings because of all the amazing cost saving benefits that come from electronic invoicing? Is it because of the efficiency and the process improvement gains that you get through electronic invoicing? Is it because of a competitive advantage? Or is it because you want to decrease your risk of fraud? So moving into fraud prevention. Or is it because you want to improve your working capital? And because when we're talking about electronic invoicing, we'll come on to that in just a moment, but just to make it super clear here for the benefit of these polls, we're talking about structured electronic invoices. We're not talking about PDFs. We're talking about pure electronic invoicing. So closing the poll in 3, 2, 1. Let's have a look at the results coming up on the screen now. You can see that the biggest driver for you, 70%, just shy of, is regulatory compliance, followed by a quarter of you talking about efficiency and process improvement gains. Only 5% of you are actually driven to electronic invoicing because of the cost savings. So thank you for sharing that. Now, so I mentioned an ebook earlier, and that this webinar is based on this ebook. So what are we talking about here? Now, so that we're all on the same page, mandates, e-invoicing mandates are moving at speed across scores of countries globally. Right now, about 99 countries have either implemented B2C e-invoicing, B2C e-invoicing, or they are in some kind of consultation to implement e-invoicing. So they're either live with it or about to go live and have declared their timings, or they're thinking about doing it. They've already done a consultation, and that consultation will likely move them into a firm e-invoicing roadmap. So right now, that's down to about 99 countries. Come 2030, the number will be about 140 countries globally will be live with electronic invoicing. So within the next 5 years, 140 countries globally will be live with B2B mandated electronic invoicing and likely e-reporting as well. The only two countries really, there'll be others, but the two major outliers will be North America, it will be Canada and the United States. So I just want to touch for a moment on what we're going to be talking about in the next 60 minutes, because this is really quite unusual. We're going to be digging into why the United States and Canada are not joining all these other countries on this huge movement towards electronic invoicing and e-reporting. We're going to explore the 7 reasons why North America companies actually do need to respond now in response to what's happening globally. And we are then going to talk about some five recommendations that will help companies launch their structured e-invoicing programs and then move to predictions. So the global trends on e-invoicing, I just mentioned now that we've got this movement, and it's an overwhelming movement. It's like a fire hose of countries globally that are coming out almost on a daily basis with updates on what they're going to be doing at a national level with mandated B2B e-invoicing and e-reporting initiatives. We can really thank our neighbors in Latin America, our colleagues in Latin America, for being the pioneers in mandated B2B e-invoicing and e-reporting initiatives. So Brazil and then Chile and Mexico were the early adopters in the 2000s and then the 2010s, introducing mandated e-invoicing and e-reporting. And the main reason that they wanted to get ahead on this, and now globally we're wanting to get ahead on this, is because we're wanting to close what's called the VAT gap. So some countries have GST, other countries have VAT. For the benefit of this, what we're talking about today, we're going to refer to as VAT. There's a VAT gap globally that's considered to be about $500 billion annually. So each year, what should be paid to governments is about $500 billion less than what it should be. So because a lot of countries are experiencing some kind of resemblance of austerity at the moment, and also because in the future working populations will be deteriorating for a number of different reasons, and costs will be going up for most governments, especially in industrialized countries. Governments are very keen to make sure that what they are owed, they collect. And we can see, for example, in Brazil, with the amazing numbers that have come out of Brazil, that ever since they've been running their e-invoicing initiative, the figures as of 2024 said that Brazil had collected an additional $58 billion in tax, in sales tax, in VAT. We also see in Mexico and in Chile that they've closed their VAT gaps to the tune of 50%. So with thanks to countries in Latin America, we now see initiatives worldwide where countries are mandating at a national level electronic invoicing. So all taxpayers, so that's all buyers and suppliers that pay tax, must now be able to send electronic invoices to their buyers and be able to receive them. And the timeline for this is right now for about 30 countries. It's in the next few weeks, we'll be going live in another swathe of countries for January 1st, 2026. 2026 is a very, very full year for a lot of countries in Asia, in Africa, in the EU. And then 2027, the schedule, which is not confirmed, but is estimated to be even fuller. So B2G e-invoicing has been around quite a lot, but B2B e-invoicing, when a government mandates electronic invoicing for B2B transactions, it takes the conversation into a whole different level. And that's because countries are then expecting that every single invoice within their country will be pure electronic, with the odd exception. And this is huge. So, for example, when Belgium goes live on the 1st of January 2026, they have almost no exceptions, and the expectation will be that pretty much every tax-paying company in Belgium will be able to receive and send electronic invoices. And the idea is that these countries will be able to reduce their VAT gaps. So let's have a look at some of the regions. What we're seeing as well is, because these mandates are coming into force, it is a significant opportunity for companies to be taking a pause, not for very long because we don't have time here, but to take a moment and think about, this is a compelling event for us to transform our finance and our IT, and our finance and our VAT organizations. So what we are experiencing is that companies worldwide, certainly the companies that are affected by the mandates, are now using the mandates as driving force to drive change within tax and within finance within their organization. And I think most of us can admit that these are two functions that have maybe suffered a little bit from neglect in the past 2 or 3 decades. So big opportunity here. I talked about Latin America. I've talked about them being the early adopters, and I've talked about some of the VAT gap kind of closing and savings that have happened here. What we're also noticing is that when countries come on board with mandated e-invoicing and e-reporting, this is just the start line. We also have countries that nearly every single country that will be doing e-invoicing and e-reporting. They'll go live, and then probably within a year, they might make another 2 or 3 or 4 changes to their compliance regulations. So it's an ongoing program, and this is one reason out of many why a lot of taxpayers, a lot of companies are partnering with service providers and experts, so the likes of Vertex, the likes of KPMG, to help them on this journey. Because it's not just a case of let's get live, it's a case of let's get live and then stay compliant forever. I mean, this is going on and on and on. So, and we're learning this through what we see in the LATAM countries. The EU is a big focus because of the VIDA initiative. So the EU Commission introduced the VAT in the Digital Age initiative a few years ago, and it concerns all 27 member states within the EU. So by 2030, all 27 countries that make up the EU must legally be live with electronic invoicing and e-reporting for domestic invoices and intra-community invoices. So all invoices that are sent to another EU country must also be electronic and comply with all the VIDA regulations. So 2025 was a relatively exciting year, a bit of a warm-up year for the EU. 2026 is a big year. It's an important year. I mentioned Belgium. On the 1st of February, we have Poland going live. We have Greece going live next year. We have Latvia going live next year. Croatia going live next year. And we have France going live. France is going live in September 2026. It's an exciting country going live for a number of reasons. Obviously, it's a key, big economy within the EU, but also a lot of other countries are looking at France as the kind of the template of what the VIDA template might end up looking like. The early adopter in the EU was Italy. So Italy introduced mandated e-invoicing in 2019, and as of 2024, they had saved or collected an additional 2.9 billion euros in VAT. So again, another early adopter that just illustrated to other countries that are now jumping on this at speed that this is absolutely worth doing. The movement is moving very much, not just in one region. So Middle East, Asia, and Oceania are now the countries that are big adopters of electronic invoicing. We've got announcements coming out from Australia and New Zealand talking about what they're going to be doing there as well. The UAE is piloting electronic invoicing next, so in 2026, but they'll be looking to move to a full rollout shortly after that. India's been doing electronic invoicing for quite some time now, and they're also, we talked about the driver for this being the closing of the VAT gap, but it's also so that governments can become wholly familiar with your tax and finance transactions and move to actually creating something that's called a digital twin of your finance and tax organization. So they get to know your operations as better than you do. It also means that they can move to pre-filled tax returns. So they'll be telling you the tax that you owe them, and they'll be leaving the reconciliation to you, the taxpayer. And you'll need to do this before the money's left your bank account. And this is already happening in countries, for example, like India. There are some elements of it that feel a little bit big brotherish, and there are many elements of it that are very exciting from a business efficiency perspective. Also, just think about how countries now are able to do much, much better state-backed funding programs for taxpayers that need to have that financial support. And this is happening, for example, in India today. Africa is also jumping on this. So we got Kenya, for example, they're already live, and Nigeria is looking to go live imminently. So there isn't a single part of the world really that isn't touched by the mandates, except Canada and the United States, and they are outliers today. And over to Patricia, who's going to explain a little bit more about why that is. Over to you, Patricia.
Thank you, Susie. I like the approach of exciting and Big Brother at the same time. I completely agree. But going back, why US and Canada don't have an invoicing mandate? Well, the first reason is because it's a fragmented tax system. So different from what Susie showed, especially in Europe, where there we have local, we have a tax kind of a federal country level. That's not the same case in US. As you know, there is more than 12,000 individual state and local tax jurisdictions, each of them with their own rates, exemptions, rule regulations. So it's very difficult to create a standard approach for invoicing on this melting pot of different regulations for each state and localities. Canada is similar as 13 provinces, as you know, and each province has their own tax regime and administration processes. So on both countries, there's a lot of decentralized tax system, which makes things very, very difficult. I don't want to say impossible. I'm going to say very difficult for implementing an invoicing solution because it's needed that centralized system. And that leads to another problem is the lack of centralization, or the centralized leads to who actually owns this initiative. Susie mentioned having VITA in Europe. A lot of the countries have local tax authorities, but that's not the case in US. The US states or taxes are levied on a state, local level. So this means that a chicken and egg situation, because the taxes are not federal, that means no federal organization is going to put their name forward and say, you know what, I want to lead this, because the money doesn't come directly to them. So again, with the fragmented tax system on a state level and the lack of a federal body, we're seeing some not this excitement from them to think about let's use invoicing as the next framework. In Canada, even though things are similar in terms of this fragmented tax system, there is no federal authority to lead this, but we're seeing the federal body start to look into invoicing, especially on the business to government transactions, so on the B2G. So if you're a company that already procure with the Canadian government, you need to do invoicing to be able to transactions with them. And we also see the Quebec province also very excited about the near real-time reporting. Real-time reporting is something more on a tax lens, which I'll talk in a minute. But so we see that Canada, despite not having a landscape compared to Europe or LATAM, but they're seeing the momentum of invoicing, and they start doing with business to government transactions and real-time reporting. The problem is without a centralized authority, it's difficult to mandate invoicing. So we're all going to see only voluntary mandates. And the third reason, Susie already mentioned, is about the VAT gap. And the VAT gap, as Susie mentioned, is the difference between the money that the governments were expecting in terms of indirect taxes, so the sales and use tax, they were expecting to receive, but they didn't receive, so money that is being evaded due to fraud or errors or any other reasons. So money that the governments are not recuperating. It's a lot of money at stake. However, again, you need that federal, when I say state, but actually it's federal level, and your tax authorities to look all these numbers. This is numbers that Susie mentioned. In European Union, we think about there is over $100 billion that is missed because of VAT gap. Brazil, because they implemented quite early, they've already recovered around 60 billion on VAT. The neighbors, Mexico and Chile, they reduced their VAT caps by 50%. And Italy, as Susie mentioned, they already saw an increase of the VAT collection on over $3 billion. So there's a lot of money that tax authorities are looking, because this money, I think we have to think about taxes as a civil responsibility, as a corporate responsibility. This money then is invested back on the society. So it's schools, it's hospitals, it's streets that's being built. So we all have this responsibility as citizens and part of a corporate to make sure that this VAT is paid. So governments are saying we're losing out this money. And it's a shame that US and Canada, from that corporate responsibility, are not looking at these amounts and say, wow, we need to incorporate, we need to create an implementation for e-invoicing, because there's a lot of money that can be missed on lost VAT. Over to you, Susie, for a poll. I'm really enjoying the poll numbers.
That's great. I know, it's great, isn't it? So coming up on your screen now, let's ask this poll question. What is your greatest concern about e-invoicing adoption? Is it complexity of global mandates? Is it technology and integration challenges? Is it lack of centralized authority and standards? Is it upfront costs and ROI uncertainty? Or is it change management and training? What is your greatest concern about e-invoicing adoption? So the complexity of the global mandates, the technology integration issues, lack of centralized authority or standards, upfront costs and ROI uncertainty, or the change management and training. So closing the poll in 3, 2, 1, let's have a look at the results. So coming up on your screen, you can see that the winner here just is the complexity of global mandates, followed in a tight second place, just over 28%, with technology and integration challenges. And court review say the lack of standards is a struggle. In the single digits, you were talking about concerns being, or a few of you were talking about concerns being upfront costs, ROI uncertainty, and the change management issues. So now I'd like to hand over to Dennis, please.
I think I'll take this one. So obviously there's 3 reasons you might think you don't have to worry about invoicing, it's not coming. The thing is, and the numbers actually that your response as well, we see a lot of companies in US and Canada already looking at invoicing as for the benefits. I know only 30% say in terms of invoicing could have some benefits in addition to be compliant. But your peers, actually around 60% of US and Canadian companies are looking to some form of automation. And actually there's a question on the chat to ask about, is electronic invoicing similar to automation of invoicing? And it's not the same. So electronic invoicing means that data is being, or the invoicing data is being sent from the source systems, for example, your ERPs, through a tool that converts that data into an electronic invoice, a compliant electronic invoice, and then is submitted to the right access point, for example, PEPL or tax authorities. So the big difference with invoicing, electronic invoicing, is there is no PDFs or paper versions or scan versions. Everything is in a data format that you and I cannot read. So this is a pure electronic invoicing model. Now, when I say these numbers around 60%, it doesn't mean that level yet, but we look in some form of automation. So we talk about, for example, scanning of invoicing, or machine learning, or can read the invoicing data and automatically map the information. So we're looking at a very high percentage of numbers in both countries of companies already are implementing some kind of automation from both AP and AR side. And the numbers, the benefits are quite high as well. So 60% report efficiency gains, 55% improve compliance and transparency, and 55% are seeing cost savings. So we're seeing a lot of companies gaining from the invoicing mandate, from e-invoicing implementation, even without the mandates, when they're just voluntary. And we do a lot of implementations with customers like that have mandates in one country, but they want to do a rollout, a global rollout, because they want this automation, efficiency, cost savings, even for countries that don't have a mandate yet. And Susie, from a technology, from infrastructure, is already being built in both countries as well.
That's right. So in the US is, I mean, what's happening in the US as far as that there are lots of stakeholders now that are very interested in seeing a ground-up adoption of electronic invoicing within the US. So out of the BPC, so the Business Payments Coalition and Federal Reserve work that was initiated in 2016, has come, I think, is fantastic. It's really going to help US-based organizations apply electronic invoicing at scale. So what came out of the BPC is the DBNA, so it's the Digital Business Networks Alliance. It's been going now for, modeled on PEPL, the PEPL framework, and the DBNA framework it's a framework that will take your electronic invoicing and it will send it on to a service provider of your customer's choice. So this is, I think it's really worth just pausing for a moment and talking about how a lot of e-invoicing is moving from happening at a kind of a low level, 20% adoption, not very exciting, to now moving at scale. I think the key enabler that is, of course, mandates are helping e-invoicing be adopted at scale. But one of the key kind of mechanics that's helping e-invoicing be adopted at scale is these frameworks that allow for interoperability. Just to build on what Patricia was talking about then, I think it's so clear that we keep repeating this throughout. When we're talking about electronic invoicing, we are not talking about human readable. We're not talking about PDFs. We're not talking about scanning. We're not talking about any of that. We're talking about machine readable, pure electronic, system to system, touchless, electronic files, so be it XML. There are various different formats that we could start talking about, but we won't because we're going to be talking about other things. But this is very much machine-to-machine electronic invoicing. And in the world of e-invoicing, historically, things have got stuck, and that's because networks historically did not welcome interoperability for a variety of different reasons. But it meant that if you started to do electronic invoicing right when it came into being, e-invoicing networks really kind of came onto the stage around 2000. And the early adopting companies would jump on e-invoicing, but then around the 30% conversion mark, things started to get stuck. And that's because around that mark, their suppliers were also being asked by other customers to use a network. But then because they were all closed networks, one supplier might be using or being asked to use 50 different networks by 50 different customers, sometimes 150. So strangely, as the market matured for voluntary invoicing, it actually got tougher and tougher and tougher, not easier, for a supplier to participate. And that is why, in my humble opinion, voluntary e-invoicing never really took off. So what you need from mandated e-invoicing is interoperability, which is provided by PEPL. And for voluntary e-invoicing, which is in play in the US and Canada, is interoperability. And that is being facilitated by the DBNA. And this is great. It really opens up e-invoicing at scale. So when you use a service provider, that service provider does not need to be used by your buyer or your supplier. Your buyer supplier can use whatever system and service provider they want, and the service providers will connect to the DBNA, and it will allow a nice seamless flow of invoicing, and everyone can participate. So it makes e-invoicing very accessible for all parties. So we're seeing this ground up initiative, and because of all the reasons that I know we're going to go into now, interested parties, and you should be an interested party for all the reasons we're going to go into now, can be using the DBNA as part of your roadmap. As far as what's happening in Canada, Patricia's really talked about what's happening in B2G and also in the province of Quebec. So there is activity there, and I think it's interesting to keep an eye on what's happening in Canada as well. Over to Dennis to talk about the 7 reasons, and this time it really is over to Dennis. Sorry about that, Patricia. Over to Dennis.
Thank you, Susie. So to highlight here, I guess that the first reason we want to discuss here really quick is about the global footprint, right? Because we have in US more than 700 multinational companies. If you think only about the Fortune Global 500, US leads most of those companies, right? And all of those companies, they do have at least some countries where they have mandates for electronic invoicing. And the consequences, as you can see, all of them, they have these penalties. Just an example here for Italy, we have between 115 and $585 per non-compliant invoice. But there are many different types of penalties when we talk about electronic invoices. We have the ones based on the revenue of the company. We have even jail time depending on the country. So there's a lot of consequences of not complying with electronic invoices. Of course, if you don't have an invoice, you will have payment delays, right? That's just the following of the process here. But I would say one of the biggest issues of not being compliant is the ability to do business. You cannot do business without electronic invoice. So if you don't have a system to comply properly and issue electronic invoices that will be approved by tax authorities or PEPAL, depending on the situation, you cannot do business at all. So that's a huge thing and requires a lot of global coordination, right? And in the end, what we see a lot during our implementations, supporting the big clients we have right now, is sometimes you end up into rushed implementations where you have to spend a lot of money to make sure, for example, you have the right data governance to comply, that you have all the structures you need to issue those electronic invoices. So this can lead to wrong decisions, excess investments, and several other issues. So I would say this is a reason number one. And Patricia, please, if you can elaborate on this, the second one.
I can for sure. I'm a big fan of return on investment. I think is a great case study to explain the invoicing and need for invoicing a company. We put here 5 reasons, but throughout the presentation, we're going to mention those reasons in more detail. The first one, no surprise, is cost saving. So if we think about a more efficient electronically invoicing data being shared, we talk about less manual work. So we think about people like I used to be, including all the manual data from the invoice. Obviously, this leads to errors. It leads to job dissatisfaction as well. It leads to also inefficiencies and time that is being saved. So we're having a very efficient process where everything is electronically. So the ideal of e-invoicing, as we've been sharing, is everything is done without a human intervention. So it'll be basically data goes from the source systems to the right access points, PEPAL, as Susie mentioned, and we shouldn't need people to go and re-key the information or key the information in the invoices. This means we have, as mentioned on the polls, infrastructure is not an issue we have to worry about as long as implementation is done correctly. The implementation, the infrastructure is done, and also we have less manual errors or reduced to zero even, and people can be allocated to more strategy, more added value tasks. So also helps with job satisfaction. So a lot of cost savings and another savings that can be made here, and linked to that the risks. Risks here can be from a point of these manual risks of entering the information, but also I read as well as security. We see more and more cyber attacks, bad actors penetrating the data, and we'll cover that in more detail on other risks. But this is something that is concerning, is the risk of financial data being hijacked, and obviously people using fake invoices. With invoicing, electronic invoicing, that is no longer possible. So again, we're reducing the risks. We're making the IT people very happy. We're making the staff very happy as well. And we're making the world happy. As you can see, I'm a very, very positive person in terms of environmental and corporate responsibility. And I see ESG, the environmental, social and governance framework, and the corporate responsibility of the companies as something that we all need to support. And e-invoicing does that. From an environmental aspect, for example, reduces of paper usage, less carbon footprint, but also from a society, we're helping to reduce the fraud, helping to make the supply chain more secure. So there's a lot of nice initiatives that e-invoicing can support from an ESG framework. The fourth one is to boost the competitive advantage. And we're going to be talking about this in more detail. I don't want to spoil, but mainly means even without a mandate, you will get fantastic gains. And the numbers are saying something around 5 to 7% or 7 times more comparing to your competitors if you start doing e-invoicing just from a system perspective. Not even think about the mandates. We talk about the cost savings, reduction of risks, but automation, efficiency, all those I know is buzzwords, but there is great case studies per industry of companies that gain those fantastic gains just from doing e-invoicing. And finally, but not least, the saving time. Everyone saves time. It should be a click. So people get happier, the systems get happy, IT gets happy, finance get happy. So it's a happy place for e-invoicing.
Yeah, the reason.
Number 3. Yeah.
Yeah, thank you. So the reason 3 here that we see is the visibility into the liabilities, right? Because currently in the manual process, you have lag time, right? At the time that you can see that, for example, the PO is not matching the invoice, usually takes a lot of time in systems where you don't have electronic invoicing in place. And just an example here, right? Usually on electronic invoicing countries, you can have visibility of the invoice real time. So at the moment that your supplier issued that invoice to you, you will receive a notification. You can understand all the information on the invoice. You can run a two-way match, for example, matching with the PO, checking all those taxes, everything else. So it's really easier and faster for you to check the invoice and understand if it's compliant, if it's okay to move forward for the payments, for example. And this is critical, right, for US and Canada, due to the interest rates, the volatility we have, supply chain disruptions, the cross-border trade complexity, and some economic uncertainty we can have. So this visibility here is crucial and really streamline the process in the end. So it's a really good advantage on the electronic invoices on this piece. And on the reason 4, Patricia, can you please?
Thank you. So working capital, piggyback what you just said, working capital is one of the finance CFOs and other finance leaders' main worries, both for AP and AR. Managing working capital is there to a priority. However, we're seeing that payments, and especially in US and Canada, but also globally, there is payment delays, very common and very hitting the high numbers as well. In addition to that, we're seeing also that invoice disputes are getting dragged for weeks and even months. So if you add all this complexity of payment delays, invoices being dragged, we're seeing that cash is being trapped in inefficient processes. This means no access to cash, but at the same time, no visibility to that cash. So this is a challenge that companies are seeing now. E-invoice, I don't know, going to say you're going to fix all the problems for cash flow and working capital but it will definitely help. So we reduce the days of sales outstanding. It will improve the days of payment outstanding as well. So it makes the money goes faster from both ways, which makes your relationship, your business partner also better. And we all know how it takes time to onboard a supplier, and making that process much quicker will definitely help their relationship. But from a finance perspective, and as you mentioned, Dennis, there's a lot of uncertainty from a micro and micro level at the moment. And this instability is from a both economic and financial level. At least if you have your balance sheet in terms of health and visibility sorted, it will help to do better financial planning. And we all know the financial planning comes from data and data insights. So all having this true visibility on how much you are due and when you are due will make you will help you to make better decisions and improve your liquidity. Will also improve your payments, right, Dennis?
Yeah, I guess everything is linked, right? So when you have the electronic system, right, it's much easier for you to process payments and verify everything you need to process the payments. But the current reality is that 60%, right, of US and Canada invoices are paid late. And that's really interesting because my background, I used to work in Brazil. I implemented electronic invoices in there in 2008. So I saw this transformation happening there, right? And you do not see this type of issue in there because of the electronic invoices. So as you can see, with electronic invoices, you have 90% of on-time payments, right? Because when you have this electronic system, you can streamline and automate your internal process. You can automatically, for example, get the electronic invoices from the tax authority that were already validated, right? And then you can run all your internal matching processes automatically. You can validate the taxes automatically. You can inbound into AP automatically. And then this whole process gets really streamlined in the end. So no printing needed, no manual keying. You don't have this type of issues anymore with electronic invoices. So in the end, what you have is a really improved payment system, right? Which leads to more efficiency and even improving the cash flow for all the companies. So that's something really great on the electronic invoicing system. And here is the reason 6. Can you elaborate on this one, Patricia?
I'm actually going to put your reason. I'm going to dial it up on steroids because I feel like there is actually financial gains to get to have to go into not just pay on time, but pay early. Most of the companies have a terms and condition of 30, 60, 120 days. But what about if you know that you process efficient, you know you receive your invoices and you are able to pay? What about agreeing early payment discount? Companies that we spoke, they were able to negotiate this discount, save 1 to 3%. Now, if you times this millions, is millions on annual savings. And also think about your relationship with a supplier. You're going to be the preferred one because you even pay earlier. So this actually is going to impact very positive your relationship with your suppliers, your business partners, and also your finance team, because again, you have visibility to the cash flow and you can make better decisions. On top of that, and Susie mentioned this at the beginning, with the fact that you're now reporting electronic invoicing data to governments, and again, I don't want to go into the big brother. I love that idea of a big brother. The governments also have an idea of the health of the corporate. So they no longer wait for the audits at the end of the year or 2 years after or receiving the tax returns. They can see real time how is that company financial health. And what they do, including countries from, as Dennis mentioned, in Brazil, but also Mexico, India, they are doing government-led loans. So they know who are the companies are in good state, and they can say, you know what, I know your financial position, I know your tax position, therefore I'm going to loan you this money. Now, you don't need to be based on those countries to have access to these loans. You just need to operate on those countries with electronic and compliant e-invoicing. And the moment you do that, you can then qualify, receive those loans, and think about if you combine that with these early payment discounts, the business case for invoicing is done. So if you need to put a business case just for electronic invoicing, just print reason 6, and it's done. It pays by itself. Obviously, there are all the other reasons, but this one is probably the one that has the larger number impact on your finance. Now, if we think about a company just doing domestic transactions in US and is not exposed to invoicing, unfortunately, you're going to miss out all these loans opportunities. And finally, I'm just going to quickly mention, I don't want to feel like I'm in a crusade for fraud reduction, but with electronic invoicing, companies are less exposed to these cyber attacks, and also we're seeing FBI reporting. With AI, there is more fraud-led invoices being sent in paper, duplicated that get paid twice. So e-invoice actually serves as your defense, and your IT team is going to get really happy now. It serves as defense, protects you against the cyber attacks. Okay, so I think we summarize all the reasons to help.
Yeah, I think I'd really quickly just add 7 reasons. I mean, for the multinational companies that are based in the US, headquartered out of the US, the massive driver for you right now is compliance, right? So your entities elsewhere they are being faced with this right now. And just because you're not kind of local to the mandate epicenter, which you could say is, right now is somewhere in the EU, it's somewhere in Asia, it doesn't mean that you're not hugely affected by this right now. So huge driver for you right now is compliance, and the really big drivers for you right now, reasons to react right now for those organizations that operate within the US and within Canada. The business savings are vast, especially now that e-invoicing, voluntary e-invoicing that is happening in the States right now and in Canada, is supported by interoperability. You've got this interoperable framework. It means that voluntary invoicing campaigns aren't just going to get to, say, 30 or 40% conversion. You're going to get to 80%, 90% conversion because you've got interoperability. And as a result of that, a company that's just got 50,000 invoices a year can be looking at about just shy of $600,000 in annual savings through voluntary e-invoicing if they convert 80% of their invoices to pure electronic. And that's really helped because of the interoperability that's provided by frameworks like the DBNA. I'm going to hand back to Dennis for 5 recommendations, please.
Thank you, Susie. So here we have a really straightforward roadmap here, right? Just kind of a wrap up here on to successfully implement the electronic invoices, right? I guess the first one here is to have this centralized team, right? One of the main things of electronic invoicing, and we saw this a lot happening across many big companies, is they need to understand that this will affect the whole process inside the company. So you have for example, customer master data, the client master data, material master, and all those things, taxes, right? So all the teams are really involved. So when you have a centralized team to manage properly all the expectations in the company, on the entity, this will be much easier to have what you need to comply, right? And if you go to number 2 here, think globally from day one, as we mentioned, right? Many countries are now into electronic invoicing mandates. So if you have a framework inside your entity or inside your company to really manage properly electronic invoices globally, this will help a lot to engage all the teams you need for all the jurisdictions you have. So this is a huge one, right? And you need to have this business case, right? So all the organization can be there onboarded with you and really streamline this process as soon as possible, the best way possible. And the 4th one, Patricia, if you like.
You say think about globally. I also think about taxes as well, coming from a tax person. So e-invoicing is part of the mandate we're seeing globally. But we're also seeing countries or governments pushing for near and real-time reporting, as Spain SII. So when you think about e-invoicing, considering also the tax perspective of it, and the new mandates are coming from a tax world. So not invoicing just finance, but also what's happening broadly that you can loop in on this transformation. And finally, I would say select the right technology partner and also implementation partner on this journey. Think of all these 4 factors, think globally, think about a solution that is able to bring the data securely from your source systems into the right access point that is global. And finally, which is, I think the stats, I think was 60%, that can keep up with this global mandate is a full-time job. KPMG and Vertex independently, our own tax research teams, and this is their full-time job. So you don't want to create more work for them. But now it goes to my favorite part, which is the predictions. What is going to happen in US? So I have a few ideas, and then I'm going to ask Dennis and Susie to comment. The first one is, this is going to get even better or worse, depends what you want to qualify it. I would say even better. So we talk about 140 countries having some form of mandate. I know there's a question on the chat to talk about countries moving it forward. I think we saw that in the past, but for example, Belgium, and as Susie mentioned, they say no. It's 1st of January for Belgium, is September for France. So I think countries are now, with VIDA and this global mandates coming, they're not going to push more the dates forward. They're going to stick to their dates. So we see that this is going to extend in terms of number of countries and also the mandates. I see that more companies are doing the invoicing implementations ahead of the mandates as well because of the competitive advantage. Also, as the opposite, if you're late, then you're going to be very, very expensive. And then I have a provocative prediction. I have a feeling that similar to Canada, US or the major US states are also going to start doing invoicing on their state level. I'm going to put my money there. Let's see if I get millionaire or not. Dennis, what are your predictions?
Well, I agree with your predictions, and it's something that I would say it's there for a long time now. Like I said, the early countries were there between 28 and 2010, and we've been seeing this evolving, right, for many years, and it's really, I would say, technological right now. You have many different ways to comply from the technology perspective, different operational modules. So I think the future is that the near future is that I would say US will be there for sure with all the states. I cannot say if it's going to be something federal level or state level for sure, but I would bet would start on state level, and that's what I see.
Great. Yeah, and I'm with you both. I think it's going to be interesting to see what happens at a state level. And yes, there was a question about delays, and I'm with you. Actually, I mentioned that Latvia is coming online in 2026. That actually has been delayed. And I think looking at delays within the EU region, I think look at that with a slightly different lens. They've all got to be live by 2030. So if it's delayed from 26 to 28, they've got to be live by 2030 anyway. I think that we're going to see a reduced amount of delays, and delays that we are seeing at the moment, like Oman, like Angola, we're just seeing delays by a couple of months, few months, 6 months. So we're not seeing the delay that we saw, for example, with France. There were a few delays there, if you'll remember. So this is happening, and it's real, and it needs to be a big priority. And we're going to be moving to questions. So thank you very much to Patricia and to Dennis. What kind of follow-up would you like from today's webinar? Would you like a call with an expert like Patricia and Dennis to just really understand a little bit more about how you should be moving forward? Would you like more information on e-invoicing, or would you like a demo of the Vertex technology to understand how the Vertex technology can help you with e-invoicing and e-reporting? So if you're able to participate in that, we will move through to a couple of questions. Does e-invoicing apply to intercompany transactions or to just transactions with third parties? Who'd like to take that one?
I can take that one. Third parties only.
Thanks.
Yeah, I can elaborate after.
Okay.
No worries.
Great. Okay. And I think as well, if the intercompany transaction has VAT treatment required, I think some countries might stipulate that. Okay. So. And how does e-invoicing impact US companies doing business in EU countries and under VAT registered? Do we have a response on that one?
So VAT registered or not registered?
Let's just, so VAT registered.
I can take that one, Dennis, if you want to complement. So it does. So, for example, the moment you're operating in Italy, and if we remember the graph or the map that Susie showed, if you're doing business with one of those countries, you need to be compliant. So you need to be able to send and receive electronic compliant invoices. So it means you need a solution to be able to be compliant.
Yeah, and there are different mandates. There are different mandates, right? So depending on the country, you have a different mandate for a specific type of transaction. So you really need to understand with who you're doing business and what type of transaction it is.
And this is, I think, coming to the end of this packed webinar. And I've got a poll up there right now asking if you'd like a copy of the report. I urge you to say yes, please send it to me. This is why you want to partner with a Vertex KPMG on all of this. This is not your bread and butter. unless you work in the world of e-invoicing and compliance and tax, this is not your bread and butter. It's only going to get more complicated. So let's leave it there for now. And thank you very much for participating in all of those polls. We've got some exciting webinars coming up. So please do go to Shared Services link to find out more about upcoming webinars. But for the time being, ladies and gentlemen, it's been an absolute delight having you with us today, and we look forward to welcoming you next time. Thank you and goodbye.
Thank you.
Thank you.